Hello traders, and welcome back to my YouTube channel, IPDATrader. Now in today's video, I will be doing a top-down analysis and actually giving you keys and information on how to deduct a higher time frame to lower time frame analysis. Some of you guys requested it through Telegram, so we're going to be doing that. And in this example, we're going to be looking at XRP USDT. It's not something that I trade, but it's just to prove that the concepts and ideas that you're learning here actually hold weight and you can use them to trade across multiple markets and charts. So yeah, let's actually get started. Okay, traders, we're on the drawing board as we usually do. And what we're going to be learning today is how to deduct higher time frame to lower time frame analysis, right? Or in other words, multi-time frame analysis. And you may be asking yourself, and what's analysis? How do I do that? Well, that's pretty simple, right? Let's imagine you're first opening a chart of a market you want to trade. So in this case, we're going to be looking at crypto XRP. And what you want to do is essentially start with the higher time frames and work your way down into the lower ones, right? So for example, you would start with a monthly chart, right? And once you understand the picture and what the monthly chart is actually doing, then you can continue with the weekly, then the daily, and so on and so forth, right? Then maybe a 12-hour chart, then maybe a 4-hour, right? And you want to be doing that. Once you understand what is happening here, you can put a check and continue with the next time frame, right? And you won't stop looking at different time frames until you completely understand where do I want to execute in this market? What am I expecting? Where are we heading? What is happening? What is the most probable scenario next, right? Those questions you need to be asking in your head, and you're going to need those answered before proceeding with any executions, right? You need to understand the monthly, the weekly, the daily, and all the way down until you're happy and satisfied with the information that you actually gathered throughout those time frames. So for example, you would open up the monthly chart. The monthly chart may be doing something like this, right? And you don't want to get caught looking at information in the past like this, because that would be 3, 4, 5 years down the line, and it's not much relevant, right? If you're trying to execute today. So you want to be looking at the most immediate price action and trying to create a story around what's happening, right? And once you do that, you go to the weekly and proceed with the same thing, back and forth until you're happy with what you understand. So yeah, that's the bare bone definition and explanation of a multi-time frame analysis and how to actually do it. So now that you understand the theory, there's not much else to it. So we're actually going to get started with the charts. So as you can see, this is XRP USDT. It's not something that I look at, but let's get started. So watching the monthly, we can see that the first information we have here, which is this bullish candle, is from May 2018. So not much of a relevance, to be honest, if we're looking to trade today. So there's really not much to it, right? What we can see is that we have a potential break in market structure to the upside, right? We broke the structure right here. What else do we see? We see that at one point we had this blue candle right here. This big bullish candle was inefficiency all the way down, right? From here to here, we only had buying pressure. So that's why we had those 2 consecutive bearish candles that failed all that inefficiency. And now we've potentially hit a block somewhere over here, right? We can see a bullish block. As you can see, 2 rejections, and we are now potentially moving higher, right? So yeah, that's information I can gather from the monthly. As I said, I don't need to go too much detail on what's happening, because the monthly really is just to get the overall picture, nothing else. We now move into the weekly, and if we remove all this, what do we see here? Well, we see that we indeed failed all this inefficient price action, right? From here, well, let me grab this. We had all this imbalance that got filled with this wick. We've potentially hit a block at this point, right? We've got a demand zone right here. Whoops. Just like this, right? You can potentially use this area, this area. It just really depends on how you would like to refine it. But we've potentially hit a bullish block and we moved away from it, right? We hit the block right here and we traded away. Great. What did we do next? We actually moved up, filled some imbalance, potentially hit a lower time frame block that we're going to be taking a look now, and we're starting to descend, right? So that's that in regards to the weekly. Let's now continue with the daily. So if we jump into the daily time frame, we've got even more information, right? As you can see, as you start zooming into lower time frames, you will get more information. But it's important that you start with the higher time frame so that you don't get confused on what's actually happening. And if we look at the daily, we can see pretty much the same thing, right? This is annoying. Okay. We made a high, we made a potential lower high, and we may be on our way to making a new higher high. However, that's not really the case right now, right? That's not some information I would classify as important or anything like that, right? You would look more into the more recent price action, what is actually happening and developing here. So we can see if we zoom into the candles, we had some sort of liquidity being engineered over here, right? We see liquidity, we grabbed it with this wick, we broke structure right here, right? The moment, let me actually do this. The moment we traded below this low, we have broken structure to the downside, right? And what we actually did, we can see it. We made a low, we made a potential lower high, we broke structure again, right here to the downside, and a potential expectation you could have now is potentially price returning somewhere up here, hitting the block over here, and continuing to drop just like this until we actually hit the higher time frame demand that is sitting here that we identified from the higher time frames, and then we could potentially get a shift into high and reaching higher prices, or like this. We could potentially get higher prices since we actually made a new high at this point and we're respecting the origin of that high for now, at least, right? So that's some information that you can deduct on the higher time frame, such as the daily. So let me actually get rid of some of this stuff here. We don't need it anymore. It's just important that you understand that we're bearish. If we're looking at the daily, we're actually bearish because we grabbed liquidity on the way up, we broke structure down, we made a confirmed lower high, and we broke structure again, and we're potentially retracing now to make a new lower high before we continue with a new lower low. So when we look at a 12-hour, really very similar to the daily. I would actually suggest you jump into a 8-hour, for example. And if we look into the 8-hour, we can see liquidity over here. This is all liquidity. This was imbalance that just got filled with this wick. And if we look closely, we can see that we've actually hit a block over here, right? So that's something of importance that you may want to track, right? You can say now to yourself, okay, we've engineered liquidity on the downside, we've returned to an origin of a swing, we've hit the block, and now we may be on our way down, right, to descend. So that's that, maybe a 2-hour chart, and we get more information, right? We can more precisely see what's happening. As we can see, this price action is kind of messy, but I'm pretty sure people would call this a accumulation, selling climax, automatic rally, potential STs. So you could be expecting a deeper sweep, maybe ST and B, continuing down into a spring and then continuation, right? But we don't know that yet, and it's really not of importance at this point. What we can pretty much see is that we've hit this block very precisely, right? We've tapped into it and we're moving aggressively away after grabbing all this liquidity on top and potentially now targeting all this liquidity below. So now we zoom into a 30-minute time frame and it's the same thing, right? Now if I may want to be watching out for this particular price point, because if we break structure right here this week, if we trade below this, after this aggressive and liquid mitigation. Again, watch the video on mitigation if you need to. It's pretty good. So I may be wanting to watch price below this area. Once we get a break below this area, right, I can then potentially wait for a retracement and return into some block inside this region. And if I see the lower time frame shifting again inside this region, right, then I can potentially take sales down, as it's very likely that we're going to be continuing dropping since we got all this liquidity over here that we need to clear at some point, right? What we've also done at this point is identified a range, right? We got the lower end of the range, which is over here, and the higher boundary of the range, which is for the moment up here. So now you know that you're trading within a range, right? And this is your range. You now can actually go ahead and try to catch pips on the way up or down, just based on your comfort level and what you're actually happy with executing on. So yeah, that's that. Zooming into the 15, as we said, we could be waiting for a potential break in market structure below this low. Once we get that, then maybe you can expect a return into the supply. As let me get rid of this because it's not looking good. Right, and let's actually do it more precisely. So we could be waiting for this low to break. If we do get that, and if we return, you can say to yourself, okay, we've got imbalance over here. We may actually want to fill that maybe into this liquidity void. And once we get there, right, I may want to be watching price here, because if we get a nice shift, I can then safely say that we can take sells down into the lower part of the range, right? Because we're playing within this range. So yeah, that was pretty much it in terms of how you deduct the higher time frame to lower time frame. As you can see, you start on the higher time frames and you work your way down and really try to understand what price is telling you, where we're potentially heading, where did we last mitigate it, where is liquidity being created, where is liquidity being grabbed, and all that sort of questions, right? So let me actually write it down. You need to ask to yourself, where did we have a mitigation? Where is liquidity being created? And where is liquidity being grabbed? Where are we structurally heading? Again, there's a typo there, but that's fine. You get the idea, right? You want to be asking yourselves those questions as you work your way down the time frames, and really try to understand what price is telling you and where we're potentially heading. So yeah, that was pretty much it in terms of higher time frame to lower time frame analysis. You work your way down until you are happy with the information that you have, and you can answer those questions that I told you at the beginning, right? Questions such as what am I expecting next? And if we look at this particular example, what I could be expecting next is a break of this low into a retracement, right? That is something that I could be expecting. I can expect this low to break, and I can expect a retracement up here into some fills of imbalances and potentials distributions that would lead into lower prices. So yeah, that's one question you want to ask yourself. Second question could be, where are we heading, right? Where are we heading? And to answer this, you might want to be looking at a higher time frame, right? For example, a daily. And as we said, daily is absolutely bearish, right? We had this huge and actually good looking grab of liquidity that created a low, a lower high into a lower low. So we are potentially retracing. We could go ahead and push higher, but we shouldn't break above this. If we do, we're essentially not bearish anymore at this point. Or we could be seeing this as a liquidity pool into an actual supply that will then drive price lower. So yeah, that's it. That's essentially it in terms of higher time frame to lower time frame analysis. So I really hope you guys found this useful. If you did, please leave a like and comment below. I will be happy to respond and interact with you. And my Telegram username is going to be in the description below, so feel free to message me there. And I will see you guys next time. Until that, I wish you profitable and good trading. See you soon.